Hey guys, I'm Darrick Wilkins in Atlanta, Georgia. I'm one of the two founders of LTC Tree. I'm here with the other founder, my cousin, Drew Nichols.
Hey, Darren. Yeah, we are LTC Tree. I'm Drew. I'm here in San Diego. And we here at LTC Tree, we've helped tens of thousands of families shop and compare different long-term care plans. And today we're going to talk about the top 5 mistakes to avoid when shopping for long-term care coverage. So let's get started. Darrick, the number one thing we came up on this list was rushing to buy too soon. What can we tell someone about that?
That's a great, I don't know, question. We get when's the right age to buy. And I've been doing this since 1999, right out of college. So I've just seen thousands and thousands of different examples of people who they're just trying to figure out that the age-old question, when is the right time to buy it? And for most people, unless you have a major health concern, it's not honestly going to make a big deal if you wait a year or two. So the best advice that we give, if you have good health, is do it when it's right time for you. Because I mean, we realize, we get it. People have mortgages to pay off. Maybe you got to get your kids through college. So this on a priority list might not be on the top of your list, and that's okay. So if you're 55 and you want to wait till you're 60, at the end of the day, it's not going to be a huge difference, assuming you have good health.
Yeah, people tell me all the time, oh, I've heard that, let's say I'm 59 and when I turn 60, the rates are going to jump up. That's false. That's a myth. It's a gradual increase every year, but waiting a year is not going to kill anybody. So
Yeah.
yeah, that's number one. Don't rush to buy this. Number two, not comparing hybrid versus traditional plans.
Yeah, that's the hybrid long-term care insurance plans. They really became in vogue maybe 5 years ago, 10 years ago. They started to kind of trickle in. The reason was up until the financial crisis of 2007, 2008, none of these companies had raised rates on their old policies. Once that started hitting, the insurance company saw a big need was people want some guarantees. So they created these hybrid long-term care plans. They tend to be for typically the higher net worth clients. We like to see clients having $500,000 or higher of assets. But we at LTC Tree, we work with both the traditional plans and the hybrid, and we'll help you compare them side by side.
Yeah, we'll dig in deep and figure out, which one makes sense. At least look at an example of both plans because, you may a lot of people say, oh, I don't want life insurance. I got life insurance. And that's true. This is not life insurance primarily. That's just basically a return of premium with a little interest. So yeah, that's number two. Number three, and I run into this a lot too, just not researching all of your options.
Yeah, this is common, Drew. Good point that I see with people who it's a good thing the financial advisors will bring up the need, but often these advisors, I mean, their wheelhouse, I mean, their specialization is investing. They're going to grow your money, hopefully do a good job, but investing in the market. They do know about the topic, but they necessarily don't know all the intricate details that will matter 20 years down the road when you're going to use it. And it's often these advisors just show one or two companies. Maybe they're working for Edward Jones or Merrill Lynch, and they just have one company to offer you to show you. So we help clients all the time compare the company that their advisor is recommending, but put that side by side with 10 other companies.
Yeah, and you told me a story on the phone the other day about one of your clients who I think their mom had a policy and it was totally not what she expected.
Yeah, it's very common where, you know, this happened to a client. She bought her policy years ago, but she bought a policy from her advisor, and the advisor, honestly, I don't think the advisor had anything malicious. I just think they didn't know how it worked. But she bought a facility only policy. So fast forward 20 years later, when she's going to use the policy, in order for her to use the policy, she's got to go into an assisted living facility. Her situation was she broke her hip. It's not like she's going to be laid up forever or she had dementia or anything like that. So she wanted to recover at home. So she just did not understand why her policy didn't cover home health care. The reason is her advisor sold her a policy that does not cover home health care, just covers facility only. So you want to make sure you know exactly what you're buying.
Yeah, and again, look at all of the options. So she probably was given an example of a comprehensive policy and just didn't pay attention. Okay, that brings us to number four, and this is totally different kind of train of thought. not considering your current health and maybe like applying too soon. Let's talk about how some people get in a pickle with their current health situation.
Yeah, and this is where you just have to have a real honest conversation with yourself about your health, and that can be tough for people, including me and you. Always like to think that you're healthier than you are, but it's very common. Well, people they'll go to the doctor. Hey, Joe, your knees are starting to look a little rough there. I see some bone on bone action on your knees. You're probably going to need to get those replaced in the next year. Once that information's in your records, you're what is called uninsurable at that moment. Doesn't mean you can't get the insurance down the road, but if you have a lingering health issue that's not been addressed, don't apply now, because the insurance company, they don't have these tall buildings for nothing. They're masters at finding out if you're insurable or not. They'll look at the MIB network. That's the Medical Information Bureau. They'll pull a prescription drug. They're going to pull your records. They're going to find out, and you're going to get declined. So don't do that, because then you'll have a red flag on your record for the rest of your life. Do it after you've recovered. Be upfront with us. We'll help you navigate it. And in a year or two, three, whatever time we need to wait, we'll apply it at the right time when you have a good shot at getting improved.
Yeah, I think the mistake a lot of people will make is they don't realize that every conversation you have with your doctor, even phone calls sometimes, are going to be logged, and the underwriter is
Yeah.
going to see all of that. So have an honest conversation with yourself, and also if you're working with an agent, let them know your full health story, because it's going to come out in the end after you've wasted your time doing an application. And again, we'll help navigate so that you apply at the right time. Once the proper waiting periods past physical therapy, after surgery, etc., we can help you with that. And then that brings us to number 5. So we talked about not comparing your options on your policy, the mechanics of it. But then the big thing also with a lot of financial advisors, and we'll talk about this, is not comparing companies side by side.
Yeah. So as I touched on earlier, it's very common where the advisor, their firm represents one or two companies. So those one or two companies are usually just a fraction of the whole market that's out there. So what's important is to, we have some proprietary software that will take all the companies, put them side by side. We'll go over the pros and cons of each plan. Just give you an example. It's very common that hybrid long-term care insurance is a cash indemnity plan. Traditional plans are not. So you're probably asking, what's cash indemnity? Cash indemnity, for example, once the claim is triggered, the insurance company sends you the cash, sends you the money, and you can spend it however you want. You don't have to tell them how you're spending it. You don't have to be scrambling for receipts when you're 85 years old, faxing them into some insurance company in Iowa. So versus the traditional plans, you got to submit receipts. So that's one difference that we can kind of help you drill down and figure out which one you prefer.
Yeah, I had a client consultation call this morning. We actually did a Zoom meeting I had already sent him some quotes and things. We started off with one company, we pivoted to another. And by the time we were done with the conversation, we were actually leaning towards a third company. And the reason why is it's not one size fits all. We talked about it. We don't win sales awards at one company because we send all of our clients there. We spread our clients out across a lot of different companies because there's not one size fits all.
That's right. Yeah. And not to toot our own horn again. Like I said, I've been doing this since 99. You started 2006 or so.
Yep.
But between you and I and our agents, we've been the number one sales agent in the country for probably 4 or 5 different companies. And it just really, we're not married to any one company. At LTC Tree, we work for you, not the insurance company. We don't care which company you're going to go with. We don't care which company that is in vogue at the time. We want to really just get you the best deal. And you're only going to find that by shopping the entire market at the time in which you're buying, because it's going to change over time which company's in the lead for the best deal.
Yeah, and having said that, we're only working with the highly rated companies that are going to be around. So it's not like we just look at every single company on the market. We curate the better rated companies with the better reputations. So we're LTC Tree. Let's wrap this thing up. We have a whole library of videos on this topic. If you like our content, please subscribe. Doesn't cost you a thing. Comment if you have a question or would like to have us make a video about something specific. Put it in the comments. We'll reply.
Yep. Thanks, guys. See you, Drew.
All right. See you, Darrick. Bye-bye.